I CAN has been appointed as auditor of TRP Limited. While conducting the audit, he was identified some deficiencies. Deficiencies controlled in the internal control. He need to report to management, and he need to determine whether deficiency or combination of deficiencies in internal control constitute a significant deficiency, and has to communicate to them in writing to charge of the governance. Before the report, he need to give to the management on timely basis. Guide CAN with some examples and matter of consider while determining significant deficiencies. Internal control refers to relevant essays and auditing. Communicating deficiencies in internal control to those charged with governance and management. A significant deficiency in internal control means deficiency or combination of deficiencies in internal control. So deficiency, some problem in the internal control. That may be a single problem or combination of two, three more problems. If the problem pertains and you find that as per the professional judgment, it is a problem there, you need to report to management. In the auditor's professional judgment, is sufficiently important to merit the attention of those charged with governance. Mostly professional judgment. As per the professional judgment, if you want to say something, you say. If not required, no need required. Examples of matter CAN auditor of TP and TRP Limited is considered to determine whether a deficiency or combination of deficiencies in internal control consider a significant deficiency involved. These are some examples. Likelihood of deficiencies leading to material misstatements in financial statements in future. Financial statement, material misstatement. So some accounting policy they have followed. That won't be a problem now, but it may be a problem in future. You believe so, it to be reported. And it is a misstatement that may happen in future. You need to report that. Susceptibility to loss or fraud to relate assets and liability. There is a fraud where in asset or liability, wherever may be, if there is a fraud, you need to report it. Subsequent subjectivity complexity determine estimate amount such as fair value accounting system. So in mostly in inventory or fair valuation of asset, if there you see some subjectivity or some complex is happening, something should be easy. Should not be more complex, but there is complex has been happening in determining the estimate amount. Then it should be reported. It's also a kind of misstatement. A misstatement is not only a fraud, accounting policy not following is also a misstatement. Financial statements amount exposed to deficiencies. And so the financial statement balance sheet P&L, there is amount that is exposed to deficiencies. Some deficiencies in internal control. That is relating. Example, asset is not properly added. Fixed asset register having some asset value, but the balance sheet current fixed asset has a different value. Current liability is different rather than actual liability is higher. Provision for liabilities not being properly accounted. So due to the deficiencies in internal control, the deficiencies reflecting in the balance sheet or financial statement, you need to report that. The volume of activity that has occurred or could occurred in the amount, balances or class of transaction exposed to be deficiencies. Example, they have actually there has been a sale of 1 million unit, but to avoid tax, they have account made every sale in cash, and the management has reported only for 1 lakh unit. They left 9 lakhs unit. They left only 9 lakh 1 lakh units. They are showing rather than 1 million. They said 1 lakh. 1 million is 10 lakh unit, but they are saying only 1 lakh unit. So the material difference. Okay, this is one sir. No, the million and lakh there is difference. Na, this like of deficiency. They will show something in the books of account. Or you may go and see in the annual report where the management will say in their website, they may say in this year we have done a 1 million sale or 10 million sale, they have said. But when they come to the books of account, they will say only 1 lakh, 10 lakh sales. The million and lakhs, they will make misstatement, material misstatement to defraud the investors. If that kind of activities are happening, you need to report it. Importance of control of financial reporting process, or example, general monitoring control, oversight of management. So if the management is control, you want to see, they are reporting the management. But if you see some disturbances, you can report. Control over prevention and detection of fraud. So something to some management has get a concept come control. They have some control. What to make things go in the peaceful way. If the management is not following it properly, that may lead to deficiency. You need to report it. Control over selection and application of significant accounting policy. Accounting policy selection and application. This is the business, this accounting policy will apply. You should need to select them. Then not only selecting them, need to apply them. If that is not being done properly, you need to report it. Control over significant transaction related parties. The related parties, then the management, director, employees, relative employees, husband, wife, parents. If there are some transaction which is are not under the business practice, then you need to report it. Control over significant transaction outside the entity's normal course of business. So any transaction which is outside the MO and AO of the company policy, you need to report that we have our business is doing this. You can't do a business that is not within the scope of the MO AOA. That is very important. Control over period and financial reporting process, such as control over non-recurring journal entries. So when you see the entries, some entries should be stopped. Example, 31st March, the entry should be there in 31st March. You can't post 1st April, 2nd April, 3rd April sales in 31st March. In case of frequency of expectation, deduction, result of deficiencies and control. So how does this deficiencies and the control is being repeated? Usually how is it repeated? Is a one time, or it is being occurred previously, so now it is repeating such deficiency. If there is mean management is not doing the work properly, you need to report it. So these are the steps you need to see.